adjusting for.
Is
So there are a few trends I think I would highlight. One,
Morningstar
so far
tools
from
can help
banks.
make quick work.
One of the key disadvantages to actively managed mutual funds is your fund manager can leave. And so, David, how should people handle fund manager change situations with their mutual funds?
Well, it really just depends on the situation. And as you say, this is the difficult part. And one of the big risks of investing in actively managed funds, you have to make a decision when a manager changes on your fund. In some cases, no action at all is required. I mean, you don't have to make a sort of a sell decision as a result because the fund company handles the transition very well. Ideally, there's succession planning in place at the firm, and they know who's going to take over for a manager if they leave, and that person ideally views the world the same way, invests the same way. Ideally, the two have worked together before, so there's a lot of commonality in how they manage money, so that the portfolio, after the manager leaves and the new manager takes over, doesn't change much, and it plays the same role in an investor's portfolio. That fund is populated by the same types of companies with certain characteristics. So if it's a growth fund or a value fund, or sort of an aggressive concentrated fund versus a more diversified low risk fund, you've got it playing the same role. Even sometimes you've got situations where the two haven't worked together, but the replacement is a very suitable one in terms of having a similar view of the world. So a good example of that would have been Kim Shannon leaving CI Canadian Investment and being replaced by Danny Bubis at Tetram. They hadn't worked together, but just had had a lot of commonalities in how they viewed money management.
And of course, a lot of times manager changes are very different from that, and things don't go as smoothly at all. Can you give an example of maybe a more dramatic change in management style?
Yeah, so David Taylor leaving Dynamic recently is maybe the quintessential example of a manager with a very distinct approach being replaced by a manager with a very different approach. So Cecilia Moe coming over from Fidelity, there's very little common ground between how these two managers invest and what they look for in companies, and so the end portfolio is likely, very, very likely to look much different.
Now, I suppose Cecilia Moe can change the way she runs money. Maybe she'll go to Dynamic, and maybe her management style will look a little bit more like David Taylor's from now on. Would that even be a good thing?
Yeah, I sincerely hope not, for Cecilia Moe's sake. I think one of the keys to success as a money manager, and what we place a lot of value on when we're evaluating money managers, is having a consistent, disciplined approach to finding stocks. And there are strengths and weaknesses to every approach, but you have to have a way of viewing the world and finding stocks and stick to it. And sometimes it'll work out in your favor, and other times it won't. But hopefully, over the long run, if it's a successful one, it'll pay off. But by changing your philosophy every couple of years, or because you're taking over for a manager who had a different way of viewing the world, is not the way to successfully run money. I'm pretty sure of that.
So one of the really frustrating things about the Canadian mutual fund industry is it's a couple things, actually. Technically speaking, when you have manager changes where it's really two pretty different managers, they wouldn't necessarily have to change the investment objectives on their prospectus, and a lot of times that doesn't seem right to me. No. And then there are other times where, and it's not the case with David Taylor at Dynamic, but where the fund company wouldn't necessarily have to tell you, as a unit holder, that a certain individual has left, even if they were the lead manager, the key person, because they can hide behind the management team thing, where they can say, oh no, we have a management team, it didn't really matter that so-and-so left because we have the same team in place, the same investment style. How should people handle those types of situations?
Yeah, it's a difficult assessment to make. To step back for a minute, the law on this is pretty murky. If the law basically says that if the fund company features a manager prominently in their advertising, then they have to announce the departure and make a lot of notifications about it. But if they don't, then they can call it a management team, and there's not much that's required in terms of disclosure. It's a very frustrating fact of money management in Canada and the regulations surrounding it. But how to handle it is very tough, and that's one of the things that gives us a job. So we spend a lot of time, and it's a very subjective exercise to figure out, who are this team of people, who's leaving, who's replacing that person or those people, How do they mesh together? Do they view the world the same way? Have they ever worked together before? Do we think that they'll gel? It wouldn't be unlike trying to figure out, your favorite basketball team, or Kobe Bryant leaves and somebody else comes in his place. Is he gonna mesh well with those teammates? What are his strengths and weaknesses versus theirs? It's a lot of people have opinions on it, but you don't know until you actually see it in practice. So we do our best, but it is just an opinion at the end of the day, and only time will actually tell.
So there are a few trends I think I would highlight. One,
Morningstar
so far
can
we've
help
been
make quick